Hello and welcome to this module on the Real Estate Settlement Procedures Act, or RESPA. Let's do a RESPA overview. RESPA is also known as Regulation X, and it was passed on June 20th, 1974. It requires pertinent and timely disclosures regarding the cost of the real estate settlement. And here you want to highlight the words real estate settlement. RESPA is all about including pertinent and timely disclosures regarding the cost of real estate settlements. It also prohibits the practice of kickbacks, and we'll discuss kickbacks in a bit later on. It places limitations on the use of escrow accounts, and it was originally put into effect by the Department of Housing and Urban Development, or HUD. However, the Consumer Financial Protection Bureau, or the CFPB, took over enforcement of RESPA. Let's talk about RESPA's applicability. RESPA governs federally regulated mortgages secured by residential properties of 1 to 4 units, which are also called dwellings. You want to remember this. So RESPA governs residential properties of 1 to 4 units, which are also called dwellings. It does not govern properties greater than 25 acres. It does not govern temporary loans, such as construction loans or bridge loans. It does not govern agricultural properties. It does not govern business or commercial properties. And it does not govern vacant land unless there will be a dwelling within 2 years of settlement. And you want to remember this here. RESPA does not govern vacant land. However, if there is a dwelling within 2 years of settlement, then RESPA governs it. Let's talk about RESPA's disclosures. There are several RESPA disclosures that you need to be familiar with. The Homeownership Counseling Organizations List, the Good Faith Estimate, also known as the GFE, the HUD-1 Settlement Statement, also known as the HUD-1, the Mortgage Servicing Disclosure Statement, also known as the MSDS, the Notice of Transfer Statement, also known as the NTS, the Affiliated Business Arrangement Disclosure, also known as ABA or AFBA, and the Initial Escrow Statement and Annual Escrow Statements. Let's begin with the Home Ownership Counseling Organizations List. The Home Ownership Counseling Organizations List provides information about local counseling organizations for borrowers. It must be delivered at application or within 3 business days, and the disclosure must list at least 10 HUD-approved counseling organizations closest to the applicant's current address. Reverse mortgages and timeshares are exempt from this disclosure. The Good Faith Estimate is an important disclosure to know about under RESPA. It's also known as the GFE. It provides information on the anticipated costs of the transaction. And here you want to highlight the word anticipated costs. The GFE provides anticipated costs of the transaction. It's due at application or within 3 business days. It's required for HELOCs and reverse mortgages only. The loan estimate replaced the good faith estimate in the initial till for closed-end loans. So you won't see the good faith estimate used for closed-end loans. The good faith estimate is only for HELOCs and reverse mortgages. Let's talk about the HUD-1 settlement statement, which is an important disclosure under RESPA. It's also known as the HUD-1. It provides information on the final costs of the transaction. And here you want to highlight the word final costs. HUD-1 is all about final costs of the transaction. It's due at closing or 1 day prior if requested. It's required for HELOCs and reverse mortgages only. And the closing disclosure replaced the HUD-1 and the final till for closed-end loans. So you will not see the HUD-1 used for closed-end loans. The HUD-1 is used for HELOCs and reverse mortgages only. Let's talk about the Mortgage Servicing Disclosure Statement, or the MSDS, under RESPA. The MSDS provides information about whether or not servicing of the loan may be transferred to another company. And here you want to highlight the word may. This is about whether servicing may or may not be transferred to another company. It's due at application or within 3 days. And here you want to note that it is not 3 business days. These are 3 Monday to Friday days. So public holidays, Saturdays, and Sundays are excluded from the 3-day count. The MSDS is required under Section 6 of RESPA, which is the servicing section. Now let's move over to the Notice of Transfer Statement, or the NTS, under RESPA. The NTS, or the Notice of Transfer Statement, informs the borrower that their loan is being transferred to a new servicer. Notice here we didn't say may, we said being transferred. So this informs the borrower that their loan is being transferred to a new servicer. It's due 15 days before transfer of servicing, and in this case, this copy would be called a goodbye letter. And it's also due 15 days after transfer of the servicing, and in this case, this copy would be called a welcome letter. It's required under Section 6 of RESPA, which is the servicing section. RESPA also requires a disclosure known as the Affiliated Business Arrangement Disclosure, or AFBA. The Affiliated Business Arrangement Disclosure informs the borrower of affiliated business arrangements. So let's do an example. Suppose there is a parent loan originator company that owns a title company and refers the borrower to that title company. The Affiliated Business Arrangement Disclosure notes that that parent loan originator company would have to inform the borrower that they have interest in the title company, and they would have to provide them with a disclosure that provides information on the affiliated business arrangement. The Affiliated Business Arrangement Disclosure is due at the time of referral and is required under Section 8 of RESPA. Let's talk about the initial escrow statement. Now, the initial escrow statement provides information on the amount that the borrower is paying for escrow. It also itemizes the estimated taxes, insurance premiums, and other charges that will be paid from the escrow account. It also indicates the amount that the servicer will select as a cushion for the escrow account. The initial escrow statement is due at closing or within 45 days of escrow account creation, and is required under Section 10 of RESPA. Let's talk about the annual escrow statement under RESPA. Now, the annual escrow statement provides information on escrow account history. It also provides information on the activity of the escrow account during the escrow account computation year. It also provides information on the projected activity in the next year. It determines any shortages or surplus on the escrow account, and it's due within 30 days of escrow analysis. It's required under Section 10 of RESPA, the escrow section. And this concludes our module on RESPA disclosures.